So our next panel is a great follow-up to Mark's proposal that he just made. It's called an industry check-in. How have hotels adapted to thrive? And again, we have Alex Susskind, who is a professor and director at Cornell University. He's going to be moderating this panel, and it's sponsored by Heartland.
Well, good afternoon. It looks like we're all here, and we just want to get started. So what I'm going to do is just briefly introduce myself, and we'll introduce ourselves as panelists, and then we'll move forward into the discussion. I'm Alex Susskind. I'm a professor at Cornell University, and I am the senior director of all the academic programs that we have at the hotel school. And just wearing my 100th anniversary pin, we've been at it for 100 years, and so. Right, yeah, so that's a long time. And I was there the whole time. I look pretty good for my age. And so why don't we start with Rika?
Yep, so I'm Rika. I'm with Hyatt. I handle our full-service luxury and lifestyle and wellness hotels on the eastern part of the country.
My name is Phil Kebb. I'm with GENCOM. GENCOM is a Miami-based investment firm that invests in a whole broad group of hospitality assets, including operating companies, luxury resorts, luxury hotels.
I am Chelsey Leffet. I'm the Managing Director and Northeast Regional Leader for HVS, which is obviously a firm, as you likely are aware, that does advisory, full circle, full life cycle for any asset within the lodging space. And I lead a team of about 20 consultants and expert appraisers throughout our Boston, New York City and DC and Philly offices. Happy to be here.
Good afternoon, everybody. My name is Michael Escalante. I am the president of the Operational Effectiveness Vertical for hotelAVE. Joined them recently, rolled in my company to help Michelle Russo, who's ill and couldn't be here today, and told me last night that I'm going to be on here today. So nonetheless, happy to be here.
Yeah. Excellent. Well, good. Well, excellent. Really excited to get started. So the first set of questions is going to go to Rika, and it's trying to get at three things. And so, and these are things that we may have talked about already so far, but we want to make sure that we're getting them right. What are the wellness and lifestyle trends you're seeing emerging? And then how has created and delivering a luxury experience changed for you? Have you done anything differently now that we know that we have to move forward? And are there changes that you're seeing in things like urban versus suburban or rural? And how is that affecting everything?
Sure. So I would say the most interesting thing is everybody is looking at wellness and how we're implementing it. And I do think we're at a luxury conversation. So I think still high touch and then supplement with tech as clients or the guest wants it. But it's still important that we are sort of meeting the guests where they want to be. I would say the biggest trend we're seeing is that wellness is turning social. So with clubs, I'm not going to necessarily name them, but people are they want to be with like-minded people and, doing so in a sort of wellness destination, taking meetings outside, indoors. We were talking about sort of in the hotel space with meeting, having that ability to open up doors, stepping out on a patio. Fresh air is definitely sort of important. And I'm going to also say in advance, I have a flight, and at some point I'll just get up and leave, and it's nothing you've done. So.
That's right. Yeah, the panel did run a little bit late, so thank you. And so what I was hoping is we can pop down to the other end and hear from Michael, given their operational focus of what they do, and are there new things that you're seeing?
Sure.
Yeah.
So I'm the operations guy, right? I'm the one that has to take all of the promises that are made and execute against them. So I was part of the founding team of people that initiated operational effectiveness at Hilton. And it ended up being a global operation that we ran, building teams in Europe, Middle East, Africa, Asia Pac, and the Americas. We implemented this methodology against all owned, leased, joint venture managed properties. So the data has taught us a lot, and the insights that we've gathered, and most of my time I've spent in this space, in the luxury space, the insights that I've gathered have been quite insightful for us. The implementation itself has gone through hours and hours of observations of human behavior. If you think about it, especially today, post-pandemic, the value proposition for the luxury guest is in a state of flux. The employee value proposition is changing in a state of flux. Those two have to converge to be able to execute at the level sustained. But it all boils down to, again, the basics, letting the data drive your directions, drive your decisions, drive your strategy, drive everything that you do to ensure that you're fulfilling that expectation. So it all goes down to spending more time with your team, hearing from them, what are they seeing happen every day, ensuring that you create a culture that enables them to execute against what those guests need. So that's kind of what operational effectiveness does.
Right. Oh, that's great. And are there specific things, just specific behaviors that you're seeing that that have had to basically be incorporated into your operational models that guests are looking for, employees actually are looking for too? Just just a few things.
So there's several, right? So I think one of the things that is very obvious is that if you're going to hotels now, you see a lot of cleanliness opportunities for sanitizing your hands, so on. All of those things are optics things that are necessary and expected by people when they're going to properties. So I think that's here to stay. And the key is going to be to understand what your guests are expecting to see and hear. It's also how they make reservations, how they pay for their transactions. More and more so, they're going for the technology to allow that to happen. So the more that you can observe, where you can transition transactional aspects of how you do business to technology, the better, is what we're seeing.
Right, and it's important that your staff and your team understand the tools that are out there that the guests are using, so that they're not surprised when they have to deal with all those issues.
That's the point.
surrounding
What's
that.
interesting is that your employees, your teams, are expecting that same sanitizing items behind the house as well. So you've got to make sure that it's balanced.
Right, excellent. And so I guess we can move on to the next question.
I just want to pop in
Oh,
one
you
quick
wanna-
thing
you
that
wanna
we
add?
want to say is that one of the biggest movements we're seeing is sort of the zero-proof lifestyle, and I do think that that falls within sort of the wellness. So, in your menu options and how people are, like, definitely catering. It's no longer just like sort of a club soda and lime, but there's plenty of sort of zero-proof product out there, and people are asking for that and looking for that. So, again, bringing that back to social.
Right, great. That's excellent. So, so we're going to move on now to Chelsey, and she's going to talk a little bit about some data and some market stuff. But we basically want to see the outlook on group business and travel and leisure, where you see that going, and what's to come for us, given your access.
So we at HVS deal more on the value opportunities, the investments, dealing with owners, developers, so on and so forth. So we're not necessarily looking at data specific to what Michael was talking about. We're more looking at data and numbers on how that actually translates to value or translates to opportunities for an investor to be able to invest in return on their investment in an appropriate way. And obviously, since the pandemic, this has changed drastically, and a lot of that has to do with the demand that has really roller coastered depending on what segment you're looking at. Within my day-to-day business, we kind of tranche things into your corporate transient demand, your leisure transient demand, and then meeting and group. And obviously, as you've heard today, even just past most speakers, that has really changed over the course of COVID and then thereafter. Leisure's been huge, as you all are familiar. Meeting and group within the luxury segment has certainly rebounded quite a bit in 2022, and HVS and myself expect for 2023 to be just similar in that sense. They're doing great from what we've seen in terms of meeting and group bookings, which at the beginning of COVID or right thereafter, that necessarily wasn't the case, right? We didn't think meeting and group would be back as quickly as it's rebounded. So that's excellent to see. We're obviously all here today, so we're part of the process. Leisure transient demand has certainly rebounded. In international travel, especially CBD markets, you have your international China traveler, which is not fully recovered yet. We're looking at 2024-25 for that full recovery in those CBD markets, and same thing you've heard today in regards to certain markets are doing much better in certain types of demand segments. But the corporate transient is certainly the one we're watching the most in terms of the return to office, the remote workers, how that's going to affect the future of demand. How that affects budgeting, of course, is what we're seeing a lot right now in the asset management and hotel management operations, because with every value, with every appraisal market study, feasibility study, we're receiving a budget that who knows if it's right or wrong, and how do we forecast, but we're diving into those segments and really seeing if that general manager or that asset manager, revenue ops person is in line with what their market's saying through the data. And I don't know if you...
Oh, I mean, certainly, we saw a lot of the stats throughout today that I think speaks to a lot of positive, but there's still 1.3, 1.4 million employees that are not working out there in the market today. So I think the margins are somewhat artificially inflated. The reality is that how do you apply the labor you need to the services that you need to provide for the luxury client, right? And it's going to be a state of flux. You have to have the right skill set, core competency, or someone helping you quantify what that amount of labor is, what that amount of expense is to satisfy that labor. So budgets right now, as I think someone stated, they've taken the least amount of time to generate the 23 budgets than ever before because they don't know what's going to happen. So that means the property teams need to have the deductive reasoning skills and the core competencies to constantly run a continuous loop of how do we provide that service, what's the right labor, what's the right expenses, adjust their forecast, and press forward as a function of volume, right? So it's interesting times.
But, to put some numbers around your comments, Chelsey, is I sat through a presentation that Lodging Analytics did a week or so ago, and it was surprising to me. So corporate group travel in 2022 is back to 80% of the level it was in 2019 as far as room night demand went. Groups back to 85%. 19 compared to 2022. Not the surprising thing, is leisure is up 130. In 2023, it's expected to be at 130% of the level it was in 2019. And we're either blessed or cursed at GenCom, as we own a whole lot of resort hotels. We own one city hotel, the Ritz-Carlton in Philadelphia, and we can attest to this kind of 85% numbers I just did about the corporate. It's actually in Philadelphia, it's less than that in our hotel. But I'll also tell you that the increase in business that we've seen in our resorts in 2022 compared to 2019, our RevPAR is up almost 27%, 2022 compared to 2019. And in 2023, we're expecting another somewhere between 9 and 10% increase in RevPAR over 2022. So our RevPAR will be up between 19 and 2023 in our resort hotels, in all our hotels. So it's actually somewhat deflated by Philadelphia. By 36 or 37% of the increase. So that ties into the statistic that Lodging Analytics
Are you seeing more suite bookings too? Because we've been...
At our property down in Costa Rica and the luxury residential panel that was on earlier, is a couple of people that were talking about this. Things going back in a rental program. And it's interesting is that down in Costa Rica, the average, there's 47 or 48 Four Seasons branded residences, and all but one is back into the rental program. There are 2 large homes that are owned by our partner down there. One of these homes was in the rental program. Billionaire hedge fund guy comes down, booked like 4 nights around Thanksgiving, $45,000 a day for this 5-6 bedroom home.
As one does.
They were there for 2 days, had a great time on the peninsula and everything going on there, and his wife, after the second day, said, I want to stay another week. So, here's an individual that went to Costa Rica around Thanksgiving and spent almost $500,000 on guest rooms for 10 nights. Yeah. And so, I think it was discussed about the resiliency of the luxury market on residential sales. At least what we're seeing in our resort hotels is the resiliency for the customer to come in and pay these prices. When things opened back up, kind of late 20 into 21, suites sold out first because families were coming. They wanted space. They didn't want to be in 3 hotel rooms and all that. We're not seeing as much of that now, but you're exactly right. When business came back, it really came back strong on the suite sector.
Right.
Oh, that's great.
Well, when business came back, right, kids were still doing school from home, so you could extend sort of longer weekends. Now that schools are back and open, we don't see as much of that, but still working on the road and being able to have more flexibility. It'd be interesting. Somebody had mentioned to me they thought we might even see a new business segment, kind of maybe we're not traveling, or working remotely, but have to go to sort of headquarter a little bit more and maybe staying a week, a month near headquarters. So we might even see a new business segment coming out of sort of this recovery.
Yeah, and someone, and I heard speak recently, has speculated that group business will come back stronger because people are not getting together in offices or much less than they did before, and a means to get them together physically is a meeting somewhere with a group. So time will tell, but the good news is if you're in the luxury resort business hasn't been better, couldn't be better. If you sell stuff to that part of the industry and all, things are going to be very, very good for the next 2 or 3 years.
Excellent. Well, that gives us an opportunity to transition to some questions for you, Phil, that are connected to, I guess, the bigger picture. So, could you comment on the appetite for buying and selling hotels in the market, and also talk a little bit about brand values and how new development and costs are basically being considered now as we move forward? And then, obviously, we just talked about optimistic forecasts for luxury brands, but could you speak to maybe some of the nuances of that, the revenge travel and the contraction of the 3- and 4-star properties and some of that stuff? So that's a bunch for you.
It's a lot of questions.
Right. And I just wanted to make one other note that Rika has the best picture ever. And I think we all should have photos of us sitting at a bar. I'm just saying.
That's a
And I
statement,
have a
isn't
cup
it?
of coffee specifically so it would be daytime appropriate.
But
I had to say that.
It's at the Thompson.
It's at the Beekman.
Yeah, it's at the Beekman.
I recognize the bar.
My home away from home.
Sorry, I had to say that.
There are a lot of questions there, but talking a moment ago about we're very, very bullish. If you own existing resort hotels today, existing luxury hotels, but specifically resorts, we think you're in a very, very good place. Margins have exploded. RevPAR is way up. The growth rate is predicted to be 1% or less over the next 3 years in that sector. So if you've got a hotel and it's operating, you're in a good place, you got good customers, you're going to continue to be successful. Trades have dropped because of the significant rise in interest rates. I mean, most people don't realize this is a typical loan for any real estate, but for a hotel might be, somewhere between 400 basis points and 600 basis points over the base rate. The base rate used to be LIBOR, it's now SOFR for reasons I don't know. The bankers know all that stuff. But dial the clock back to the beginning of this year is the base rate was 25 basis points, a quarter of a point. The base rate today is somewhere between 375 and 425. And the spreads have gone from 375 or 400 to 5 or 550. So the cost of your hotel debt in the first 4, 5, 6 months of this year might have all in been 5%, less than 5%. Your cost of hotel debt today is somewhere between 8 and 10%, depending on the market you're in and where it is. So the cost of capital, the cost of your debt has doubled for people that are in the business. So what's happening are people are not trading because they can't get debt, the economics don't work. So transactions and trades have slowed way down. And on the development side, somebody here can correct me at lunch, but we are unaware of other than deals that are on a glide path to closing in January of this year, they're on a glide path to closing. I don't think there's been new luxury resort or luxury hotel deals announced in probably North America. We were fortunate enough to close on a loan for Ritz-Carlton Reserve at our property down in Costa Rica back, 4, 5, 6 weeks ago, but we just got under the line of getting that done. And so as a result of there not being capital, not being money, we don't see much growth on the supply side in this sector. And again, it goes back to the thesis of you're in a good place if you own existing hotels because the supply is not going to increase over the next years. Questions about, we also own a handful of 3- and 4-star hotels. And I've had a thesis on this for a long time, is I think post-COVID, a lot of the wealthy people have a lot more and they're spending it. They're buying, Peter's sitting here, they're buying $3 and $5 and $10 million condominiums in resort locations and all, and they're spending $45,000 a day on a hotel room in Costa Rica, and they're spending $900 a night to go stay in Bermuda. And I think that continues, and I think that's very, very good. And between as I mentioned earlier, between 2022 and 2023, we're still seeing strong growth in the budgets we've gotten back from the operators, seeing strong growth for next year. But in our 3- and 4-star hotels, of which there's a handful of them, we're beginning to see significant softening. And we own a little 3-star hotel in St. Pete Beach, Florida. It's got a great, great beach bar there. And the husband and wife couple who retired 5 years ago that live in St. Pete, who used to come to that bar 4 nights a week to have a hamburger and a beer, they're now coming 1 night a week. And that couple who's driving to St. Pete from Orlando for the weekend, they're now coming, once a quarter as opposed to 4 times a quarter. And so, the people that are worried about the price of gas, the price of groceries, and how they're going to make their apartment rent and house payments and all that stuff, it's contracting. And I think if you're in that space, the non-luxury space, you're going to see continue to see contractions moving into next year. So.
Oh, thank you. And then did you want to add anything about brands or branding or?
Well, most of my career in this industry, I've worked for luxury brands, and I'm a huge proponent of brands for what they do relative to your hotel. And I would tell you today, if it's the way we look at it at GENCOM, if we're investing in a property, a luxury property, or we're going to develop a luxury property, probably 75% of our decision making about what brand is best to have on that is what brand's going to help us sell the real estate faster and at a higher price. And pick up in that comment, it's not are we going to have real estate as part of it, you're going to have real estate as part of it. And so, my friend Tim Grishus at Marriott told me 6 or 8 months ago, he said, Phil, I can't remember the last luxury hotel we've done in the Americas that did not have a branded residential product associated with it. His colleague who was here earlier said 80%. All due respect to her, I think she's incorrect. Tim says he can't remember one where they've done that. And if you look at Four Seasons and all the other luxury brands, so I'm a huge proponent of brands. There may be somebody here from Blackberry Farm or from some other independent great luxury hotels where there are great one-offs, and I applaud those people for doing that because it's really hard to do, and they've accomplished something great. They've accomplished something great for their real estate. But if you're thinking about developing or investing in a hotel today, personally, I think it's a big mistake if you're not attached to one of the luxury brands.
That's excellent. Thank you. So
what I would add just
sure,
for sort of how we also, besides residential real estate, is sort of the private club, like layering in sort of that membership to, really January 1, you are covering a lot of bases, and also you create that loyalty, especially with the local community of coming for food and beverage, hanging out, working. If you are in an urban place, right, you might be working from home, and maybe your home is in New York, and maybe it's a closet. So going to the club becomes very much part of your lifestyle.
Right, that's great. That's awesome. And so what I'd like to do with the remaining time that we have is try to dig a little bit deeper into some of the operational and business models that we're working with now to make sure that everyone can have an opportunity to talk about this. And I want to direct it to you, Michael, because you're the self-proclaimed ops person here. And we just want to see, I know that you had talked a little bit about that, but maybe we can dig into just a few things that you're working on, training your employees, moving forward with things, guest initiatives, those types of things that you're doing to create the experience for the guests. And how do you see that needing to evolve or change going forward, given that we're kind of at a transition point now?
Sure, I mentioned earlier that it's all about observing your guest and having a culture that ensures that they understand what the guests value. Specifically in the luxury sector where there was a little bit of a debate earlier what percent it is, but whether it's under 1% or it's 2% of the traveling market, understanding that expectation is critical. The next thing is to understand how to deliver those services to that market. You've got an employee base that has to understand how to provide that service to those guests. They're perhaps not used to providing that level of service to those guests. So to bridge those gaps is significant. To do it without training and the right culture and leadership in place is almost seemingly impossible to do. So if there's anything we can do now is to recognize that we've got an opportunity after the pandemic to undo some of the muscle memory we've had in the past, rethink some of the brand standards and operating standards that we have now, really ensure that they're adding value to that guest and quantify what that value is. Understand that we have another value proposition that we have to really weave in, and that's that of the operator, the manager, the owner. They've got commitments they got to make, and they're going to apply pressures to the operators to meet those commitments. So to have that trifecta work, you're going to have to provide a lot of training, I think, in today's employee base. There's going to be a culture with the changing expectations that an employee has of wanting to choose more or have more autonomy to when they do work. So the gig economy is kind of moving in that direction today. There's some companies out there that are looking at how do we layer in to make up for those loss of employees that we need to find. We need to spread our ability to look certainly within our brands, but certainly outside our companies in the market. Who's a good bartender out there that could work for us on that shift so that it doesn't stay empty and the service is eroded? We can't allow that to occur in our luxury hotels. So trying to be innovative and creative and using technology to achieve that is important.
Yeah. Right. I feel like a lot of the hotels are in a ramp-up stage, no matter if you renovated, repositioned your outlets, or you closed down and frankly reopened in 2020 or 2021. You've got this ramp-up phase that you are able to capitalize on all those aspects and do it right if you weren't doing it right the first time, or do it different in order to drive more value to the hotel and to those revenue streams. So I think that's a real positive for going forward and where we're sitting right now.
But it's a real dilemma in the luxury sector right now because, you know, when COVID hit, all the hotels' CapEx and FF&E reserve money got used to pay real estate taxes and debt service and all that. So all that money vaporized. So there were no renovations done in these hotels. The brands, rightfully so, the brand police are coming back in and saying you need to spend some money and fix up the physical facilities. But more importantly, and look, and what Michael touched on to me, I've been doing this a long, long time. I was a long time Ritz-Carlton person. And what Michael touched on, we lose sight of. It's the thousands of interactions that each of you in this room have encountered with the staff in this hotel since you've been here that makes the difference of the luxury product. You know, the Blackstone bought beautiful marble and great chandeliers and that great fancy slide outside, and the spa's lovely, blah, 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 blah. But what makes the difference of luxury hotel is the service delivery piece that goes on. And too often we lose sight of that and how important it is. But what's happening in the industry today, and I think Michael's touched on, I've heard about an app, and it's kind of like Uber for hotel employees. So you can kind of sign up, and like you're a front desk person, and you can work. You know, you may work one shift here, and then next week you may work a shift at the Ritz-Carlton or the Four Seasons here in Phoenix. The dilemma that creates for the operators is the inconsistency in cultural alignment. It's inconsistency in service delivery. Labor cost is up. I mean, our margins are getting not crushed, but they're. Do you need to go to your...
No. I was actually just going to say, do we think the recent layoff in technology, do we think the gig workers are actually going to come back? Like, is this, you know, I was going to say like a glimpse of like hope.
Well, I will tell you, at least in our hotels, we have less open vacant positions today than we did a year ago, but it's only by a factor like 6, 7, 8%. So if we had 50 positions open in a hotel, now we got 45 positions open. And the other thing that gets lost in all this, and you going through the financial statements know this, so much contract labor is taking place.
Yeah, true.
And what the operators have tried to do, rightfully so, is the contract labor tends to be those positions that are not direct guest interface positions. It's some housekeeping, it's back of house cleaning, it may be landscaping, engineering, those kind of things. But it's a real dilemma for the industry. I mean, the customer satisfaction scores were just crushed when these hotels reopened in late 20 and early 21 because it wasn't different staff. There was no staff. I mean, just grossly understaffed hotels and record rates, right? I mean, the rates were through the ceiling. Customers are the sweet customer. The expectation was great service delivery. Customer satisfaction scores got crushed, and they're beginning to come back in and put.
I'm going to say thank you.
Right. Well, thank you.
It was nothing we said.
Safe travels.
Thank you.
So in my mind, if there's a real place the luxury industry needs to focus on over the next couple of years, is this whole employee training culture, the customer interface thing, because it's a place we've never been before, is we can't hire our own staff. We're having to contract staff. We're having to use this, I call it Uber for employees thing and all that. And cost is up. I mean, I've read somewhere, somebody said in the hotel industry that labor costs in 23 are going to be up 10% over 2022. Real estate taxes are up, insurance. I mean, we have 3 hotels in Florida. Our insurance cost for 2023 is 40% more than it was in 2022. And so all those costs that are getting layered, back in or into the industry are going to squeeze margins and all, but it's still a good place to be right now in our industry.
But I also think that, the question now becomes how, right? How do you go from a culture that where you were pre-pandemic to now, where you have less employees, and although they might be coming back, not at the rate we want to, and make those that are there feel like they belong, not burn them out, ensure that they're caring and they're actually willing to be servants and providing the service they should, the way we should. That's a tough equation to solve. How do you make that happen if you're a brand or if you're independent and so on? It's going to have to be figured out, and those who figure it out now are going to be ahead of the game, I think, in the future. Not spending the time strategically with your various organizations. Doing this is going to, I think, create some issues later for them.
Right. And I just want to, so we're actually out of time, and we're the only thing keeping you from lunch. So I promise I'll be brief, but I want to thank everyone. Yeah. So a couple of things I just want to comment on as we close. This provides everybody who's in our business an opportunity to pause and to redo things. It's very rare, and Michael, you had mentioned this, it's very rare in the things that you were doing prior to the pandemic for you to say, hey, you know what? Let's take 6 months and redo our brand standards, or let's take 6 months and redo this or redo that. When have you ever been able to do that with any confidence, right? So there is an opportunity, or there was an opportunity to kind of rethink and to redo, yeah, and that's great. But obviously tying into brands and making sure that you maintain your brand identity and that your guests know what they're getting when they come, your staff knows what they're getting when they come. So it's rare, and I don't. Let's hope that we're not going to have an opportunity like this ever again. So let's get it right, and let's move forward with that. And then just one other thing about gig workers, and we're starting to see a trend that the grass isn't greener on the other side for these employees, that they all think that, oh, I have this great opportunity to do this. I can work 5 minutes here, 5 minutes there, 5 minutes there. It's exhausting everybody, and they're slowly but surely realizing that they need a little bit more stability, a little bit more consistency. That flexibility piece was very valuable and is still probably going to be valuable, but it's not going to be the driving force. So we'll see these folks who have kind of drifted away to start to drift back. And just one other point that I've seen, and I don't know how much this is in luxury, but it is happening with all the big brands. When you operate in marketplaces and you have multiple units, you can begin to gain efficiencies, labor efficiencies, by centralizing some of your services if it's possible, like laundry or linen, maybe even central HR types of things. You still need to maintain brand standards and brand identity, but does it really matter what washing machine washes the sheets as long as they're clean? And so if you're in a market where you can do that, those are benefits that are also helping. And they're not available to everybody, but they are. For those who can capitalize on that, I've seen it work really well. And in fact, I'll just, really briefly, I was just in Rwanda, and there's a Marriott hotel and a brand new Four Seasons, and Four Points, Sheraton 4 Points. And they're sharing all of the operational elements that they can. They're right across the street from each other. And so they have basically one team managing the big processes, and so far so good, it's working out for them. So
I mean, I would agree with you that in a place like Rwanda you may try to do that, but that is a very, very slippery slope to get on, in my mind, in big markets in the U.S., because next thing you do, you got a front desk clerk from the Hyatt house who's working in the Park Hyatt the next day. That's right. It just doesn't work.
Right. Well, I wasn't talking about labor sharing in terms of positions. I was talking about back office stuff, where
washing
you can
linen, and so
washing
so forth,
linen, HR processes, accounting,
and so forth.
Right?
It works in some places. Yeah.
Credit card processing technology, those kinds of things that it doesn't matter. It's not guest facing. Right. I mean, it matters. Excuse me, but it's not guest facing. So on that note, I'd like to end, and I want to thank the panel for everything that you've contributed, and all of you for being here.